We all went to school to learn reading, writing, arithmetic, the essentials. But what about managing money? What about understanding debt, investing, or planning for retirement? These crucial life skills are often missing from the curriculum. It's a disservice, leaving many graduates financially unprepared for the real world. They enter adulthood without the tools to navigate the complex world of finances. This lack of knowledge can have serious consequences. Without financial literacy, individuals are more likely to fall into debt. They may struggle to save for the future or make unwise financial decisions. This can lead to stress, anxiety, and a feeling of being overwhelmed. Did you know that only 17 states in the US require high school students to take a course in personal finance? And according to a recent survey, 60% of adults in the US have less than $1,000 in savings. Furthermore, nearly 40% of Americans are not confident in their ability to retire comfortably. Financial stress affects 72% of adults, leading to anxiety and health issues. Financial literacy is about empowerment. It's the key to unlocking a world of opportunities and achieving your dreams. Did you know that 78% of Americans live paycheck to paycheck? Understanding finances can change that. It's about taking control of your money and your future. By understanding how money works, you can make it work for you. Studies show that people with financial literacy are 50% more likely to save for retirement. When you understand basic financial concepts, you can make informed decisions about your spending, saving, and investing. This knowledge helps you avoid common pitfalls and seize opportunities. For instance, 40% of Americans don't have $400 for an emergency. You'll be better equipped to reach your financial goals, whether it's buying a home, starting a business, or retiring comfortably. Financial literacy provides the tools to plan for the future and navigate life's uncertainties. Only 24% of millennials demonstrate basic financial literacy. Financial literacy gives you the knowledge to build a secure and stable financial future for yourself and your loved ones. It empowers you to make choices that align with your values and aspirations. Financially literate individuals are 80% more likely to make informed investment decisions. It's not just about money, it's about peace of mind. Knowing that you have a plan and the skills to manage your finances reduces stress and anxiety. 70% of people report feeling less stressed when they have a financial plan. When you're in control of your finances, you worry less about money and have more time and energy to focus on the things that truly matter in life. You can enjoy the present while planning for the future. 60% of financially literate individuals report higher life satisfaction. You can pursue your passions, spend time with loved ones, and enjoy life to the fullest. Financial literacy opens the door to a balanced and fulfilling life. 50% of people with financial literacy feel more confident about their future. Financial literacy is an investment in yourself. It's a commitment to continuous learning and personal growth. 90% of financially literate individuals believe it has improved their quality of life. It's an ongoing process of learning and growth, but the rewards are well worth the effort. By investing in your financial education, you pave the way for a brighter, more secure future. 85% of people who invest in financial education see a positive impact on their financial well-being. Don't be intimidated by financial jargon. Start with the basics. Understanding the fundamental concepts of personal finance is the first step towards financial literacy. Did you know that 65% of adults feel that they are financially illiterate? Read books, articles, and websites dedicated to personal finance. There are countless resources available that can help you grasp the essentials. In fact, 78% of people who read financial articles regularly report better financial habits. There are plenty of resources available, many of them free, that explain financial concepts in a clear and concise manner. Create a budget. A well-structured budget is crucial for managing your finances effectively. Studies show that 93% of people who budget regularly feel more in control of their money. It's the foundation of sound financial management. By creating a budget, you can plan your spending and saving, ensuring that you live within your means. According to a survey, 50% of Americans don't have a budget, leading to financial stress. Track your income and expenses to see where your money is going. This will help you identify spending patterns in areas where you might be overspending. On average, people who track their expenses save 20% more each month. Identify areas where you can cut back on spending and free up cash flow. Start saving. Building a savings habit is essential for financial security. Only 39% of Americans have enough savings to cover a $1,000 emergency. Even small amounts add up over time. Consistent saving, no matter how small, can lead to significant financial growth. For example, saving just $5 a day can grow to over $1,800 in a year. Set a savings goal and automate regular contributions to a savings account. Automation makes saving effortless and ensures you stay on track. Automated savings can increase your savings rate by up to 30%. Consider opening a high-yield savings account to earn more interest on your savings. Pay off debt. Reducing debt is a critical step towards financial freedom. The average American has over $6,000 in credit card debt. High-interest debt, like credit card debt, can quickly spiral out of control. It's important to address it as soon as possible. Paying off high-interest debt first can save you hundreds, if not thousands, in interest payments. Create a debt repayment plan, focusing on paying off the highest interest debt first. This strategy will save you money in the long run. 60% of people who follow a debt repayment plan report feeling less financial stress. Consider debt consolidation or balance transfer options to lower interest rates. These options can simplify your payments and reduce the total interest you pay. Debt consolidation can reduce your interest rate by up to 50%. Section 4. Budgeting Basics, Mastering Your Money Flow. Budgeting doesn't have to be complicated. Did you know that 60% of people don't have a budget? Start by tracking your spending for a month. Studies show that people who track their spending save up to 20% more. Use a budgeting app, a spreadsheet, or a simple notebook. Over 70% of successful budgeters use digital tools. Categorize your expenses to see where your money is going. On average, people spend 30% of their income on housing. Once you have a clear picture of your spending habits, create a realistic budget. Aim to save at least 20% of your income. Allocate your income to essential expenses like housing, food, and transportation, which typically make up 50% of a budget. And set limits for discretionary expenses like entertainment and dining out. These should be around 30% of your budget. Look for areas where you can reduce spending. Cutting back on non-essentials can save you up to 15%. Can you negotiate lower bills for utilities or insurance? Negotiating can reduce your bills by 10% on average. Can you find more affordable alternatives for groceries or transportation? Switching to public transport can save you up to 25%. Small changes can make a big difference over time. Even saving $5 a day can add up to $1,825 a year. Review your budget regularly and make adjustments as needed. 40% of people adjust their budget monthly. Life is constantly changing, and your budget should reflect those changes. 50% of people update their budget after major life events. Be flexible and adapt your budget to your evolving financial situation. Flexibility can lead to a 10% increase in savings. Section 5. Investing Wisely. Growing your wealth over time. This section will guide you through the essential steps to make your money work for you. Investing is essential for building long-term wealth. It's not just about saving money but making your money grow. Historically, the stock market has returned an average of 7% per year after inflation. It allows your money to grow at a rate that outpaces inflation, ensuring that your purchasing power increases over time. For example, inflation averages around 2 to 3% annually, while investments can grow at a higher rate. Start by learning about different investment options, such as stocks, which represent ownership in a company. Over the past century, stocks have averaged an annual return of about 10%. Bonds, which are essentially loans you give to companies or governments, typically offer lower returns, averaging around 5% per year. Mutual funds pool money from many investors to buy a diversified portfolio of stocks and bonds, often yielding returns between 6 to 8%. Consider your risk tolerance and investment goals. Are you looking for steady income or are you aiming for high growth? Studies show that a diversified portfolio can reduce risk by up to 30%. If you're risk-averse, you may prefer low-risk investments like bonds, which offer more stability. Bonds have a lower standard deviation, meaning less volatility. If you're comfortable with more risk, you may consider stocks or mutual funds, which have the potential for higher returns. Historically, stocks have outperformed bonds by about 4 to 5% annually. Start small and gradually increase your investment amounts as your income grows. Consider using a robo-advisor, which can help automate your investments based on your risk tolerance and goals. Robo-advisors typically charge lower fees, around 0.25-0.50% of assets under management. Alternatively, working with a financial advisor can help you create a diversified investment portfolio that aligns with your goals and risk tolerance. Financial advisors can help you achieve an average annual return of 1 to 2% higher than self-directed investors. Investing can seem daunting, but it's easier than you think. With the right guidance and resources, anyone can become a successful investor. Studies show that 90% of millionaires invest in stocks. There are plenty of resources available to help you get started, from books and online tutorials to financial advisors and investment apps. Online tutorials can increase your investment knowledge by up to 40%. Remember that investing is a long-term game. Patience and consistency are key to seeing your investments grow. On average, long-term investors see a 7 to 8% annual return. Don't panic sell when the market fluctuates. Market ups and downs are normal, and staying calm is crucial. Data shows that panic selling can reduce your returns by up to 50%. Stay the course and your investments will grow over time. With patience and smart strategies, you can achieve your financial goals. Historically, disciplined investors have seen their portfolios grow by 10% annually. Section 6. Seeking expert guidance. Navigating the financial world. Don't be afraid to ask for help when you need it. Did you know that 70% of people who seek financial advice feel more confident about their financial future? A financial advisor can provide personalized advice based on your specific financial situation and goals. Studies show that individuals who work with a financial advisor save an average of 3% more annually. Look for a fee-only financial advisor who is a fiduciary. Only 25% of financial advisors are fiduciaries, meaning they are legally obligated to act in your best interest. This means they are legally obligated to act in your best interest. They can help you create a financial plan, choose investments, and navigate complex financial decisions. 60% of people with a financial plan feel on track with their financial goals. Remember that you are ultimately responsible for your financial well-being. While a financial advisor can provide guidance, it's crucial to educate yourself and make informed decisions about your money. 80% of financially successful individuals regularly educate themselves on financial matters. Don't be afraid to ask questions and seek clarification if you don't understand something. A good financial advisor will be patient and take the time to explain things in a way that you can understand. 90% of clients appreciate advisors who take the time to educate them. Section 7. The power of financial literacy. A brighter future awaits. Financial literacy is a powerful tool that can transform your life. Studies show that 70% of financially literate individuals feel more confident about their future. It empowers you to make informed decisions about your money, achieve your financial goals, and build a secure future. In fact, 80% of people who set financial goals achieve them. When you understand financial concepts, you can break free from the cycle of debt, stress, and uncertainty. Over 60% of financially literate individuals report lower levels of financial stress. You can create a life of financial freedom and abundance. Research indicates that financially literate people are 50% more likely to enjoy a comfortable retirement. The journey to financial literacy may seem challenging at first, but it's a journey worth taking. Nearly 90% of those who start financial education continue to seek more knowledge. Start today and empower yourself with the knowledge and skills to unlock your financial potential. Statistics show that 75% of people who invest in financial education see significant improvements in their financial health. Remember, financial literacy is not a destination. It's an ongoing process of learning and growth. Continuous learners in finance report a 20% increase in their financial well-being each year. Embrace the journey and enjoy the rewards of a brighter financial future.